Hello friends, today I have taken this topic income and expenditure account to explain. See, introduction of income and expenditure account. Children, this account is prepared by not-for-profit organizations. These organizations are working to serve the society. Their prime purpose is to serve the society. Okay, and then second, which is not main objective, is earning money. Okay, you can see not for profit organizations are not set up for the purpose of earning profit. Okay, therefore they do not prepare profit and loss account like other businesses. All businessmen, the prime purpose of all business is to earn money, so that's why whatever transaction they do, they record, proper accountings are there, and their purpose is to earn profit. That's why they calculate profit and loss account, they prepare profit and loss account. Okay, but income and expenditure is a very important account which is prepared only by not-for-profit organizations. Not-for-profit organizations prepare income and expenditure account at the end of accounting period to determine surplus or deficit, not profit or loss. Like in business, profit is earned. Here we do not say profit, we say word surplus, because it is not profit-making organization. In place of loss, we are writing deficit, because it is not loss, it is deficit. That's why. Okay, incomes and gains are credited to this account, we write in credit side, while expenses and losses are debited. So it is very simple system to prepare income and expenditure account. The difference between the two side is either surplus or deficit. If expenses side is more, if debit side is more, then it will be deficit. Okay, if income side, if gain side, if credit side is more, then it will be surplus. Okay, so these are very simple points to understand. Income and expenditure account is prepared at the end of the accounting period, matching revenue receipts and revenue expenses. All revenue income and all revenue expenses are matched of a particular year. How it is prepared, I am going to explain after few points. Okay, these are very important points which you must know to understand income and expenditure account. Children, within 2 minutes you are able to solve any numerical. Just pay attention here. Important points for preparation of income and expenditure account. First, it is prepared on accrual basis of accounting. Accrual basis means as and when transaction takes place, it is to be recorded. As and when transaction takes place, it is to be recorded, not on cash basis. In cash basis, whenever cash paid or received, then it is recorded. No, but it is whenever transaction takes place, then it will be recorded. The first very important point. Second, revenue expenses for the accounting period are taken, whether they have been paid or not. A very important point, it is revenue expenses for accounting period. Accounting period means that period of 12 months. Only the 12-month expenses are taken. Whether paid or not is not important. How much is paid, how much is not paid is not important. If out of 12-month expenses, children, only 8-month expense is paid, 4 month is not paid, but we write about 12 month. Remember, if 14 or 15-month expenses are paid, 3 months are deducted, prepaid, only 12-month expenses are recorded. The very important point before preparation of income and expenditure, that we write only 12-month expense, whether paid or not paid. Very important point. The same principle we apply for income also. Revenue incomes for the accounting period are taken, whether they have received or not. Okay, whether they have received or not. So 12-month income of accounting period, 12-month revenue incomes we take. If we have received only 9 months, 3 months is not received, but also we write 12 months. If we have received 2-year income, but we write only 1-year income, we write only 12-month income, revenue income of the accounting period. This is very important point. Then children, non-cash expenses is also recorded, like depreciation and capital expenditures like purchase of land are not considered. Land, building, machine, furniture. Why it is not considered? It is not considered because capital expenditures are incurred not for 1 year, not for one accounting year. It is incurred for many years. The benefit of capital expenditure is derived in many coming years. That's why capital expenditures are not recorded, and capital expenditures are recorded directly in balance sheet. So these are the few points. And one more point, capital incomes or receipts are also not considered. Remember, because it is of capital nature. Only revenue nature incomes and expenses are recorded in income and expenditure account. Now, quickly, I will show you how to prepare. Okay. So children, this is income and expenditure account. In debit side and credit side, in debit side we write expenditures and in credit side we write incomes. So let us see quickly what expenditures we write here. All revenue expenses like salary is a revenue expense. Any outstanding is there at the end will be added, and any outstanding is at the beginning will be subtracted here. And this principle applies with all the expenses. Remember, expenses outstanding at the end will be added and expenses outstanding at the beginning will be subtracted. To rent, if it is an expense, debit side. To insurance premium, if there is any prepaid, we subtract. If there is any outstanding, we add. Simple. Audit fees is an example. You can see printing and stationery, which is consumed during the year, is recorded in the debit side. To honorarium, any money which is given to coach or any special person who is not working in the organization. If we have called some particular person to give some specialized services, then honorarium is provided. To telephone expense, it's a general expense. Every month it is to incur. To repairs, a revenue expense, regular expense. To depreciation, only of accounting period is recorded here. To loss on sale of fixed assets, definitely fixed assets do not come, but loss on fixed assets we record here. To material consumed, the material which is consumed during the year will be recorded in debit side. And then you can see in credit side by subscription. Income. Subscription is the main income of not-for-profit organization. To keep the membership alive, each and every member has to give their some amount of money regularly, that is known as subscription. This is the way to calculate subscription. We add outstanding at the end. We add advance in the beginning, and we subtract outstanding in the beginning and advance at the end. By entrance or admission fees is revenue income of not-for-profit organization. By general donations, if this is a specific donation, then a specific donation will be recorded in balance sheet, liability side. General donations will come here in income side. By legacy donation, if legacy is general, not for any specific purpose, then it will be recorded in credit side. Otherwise, it will be recorded in liability side of balance sheet. By sale of old newspaper, by rent received, by gain on sale of fixed assets is income. By sundry receipts. If expenditure side is more, then the balance which is remaining in income side is deficit. If income side is more, the balance which remains in the debit side is known as surplus. I hope this is clear to everyone. Thank you, my dear children. Thank you for watching.